Traders, welcome back to our price action trading lesson. We're looking at S&P 500 and many futures. The time frame is 2000 tick chart, and we have one supportive indicator in the chart. It is the 2-bar EMA. This is the overall structure: breaking new high, downtrend, breaking new extreme, and now prices are pushing back above the EMA. So when I'm watching a structure like this, it's not fully obvious what exactly is the pattern. I'm using only the candlestick, the price action on the chart. But one thing is clear, and that is we traded up into this what looks like to be consolidation, but this is not really confirmed consolidation just yet. So let's see what's going to happen. I'm going to follow the short-term uptrend working higher. Market is going sideways, you're breaking new high, and market keeps going higher, and market keeps pushing higher. Now, because we traded up into this consolidation, and because there's so many high lows and high highs, I'm not even thinking about selling. This trend range is not really trend range just yet. It's just about to be confirmed. It's too bullish, and I can see some geometric formation of these high lows. So what I can do, I can draw some small spike and a channel pattern. So let's see what's going to happen. It looks like the market may reverse down, and this can indeed be a possible consolidation, but let's see what's going to happen. And we pushed right back above EMA. So this is important. The fact that we pushed back above the EMA, it's actually confirming the bullish bias. And now this spike and a channel pattern may need to get new high. So market is correcting. And we have visual high low. We have a new high, first entry long, pull back, second entry long. And now we have first entry short using this low because it's the lowest of the correction. So new low, first entry short. So this is high low double bar setup because you cannot go long above this horrible bar. You can consider secondary bar, and using these two bars as a double bar entry, you know, it's quite close to this resistance. It's not the cleanest setup, but more advanced trader can consider because it really confirms now the spike and the channel pattern and the fact that the structure is too bullish. And notice how market keeps going higher, and it keeps going higher. So now I have to zoom out and I have to ask myself, okay, it's clearly not acting as a trend range. We have series of high highs and high lows. I need to locate additional pattern. I need to have some channel in play because these candles on the chart are always part of some channel. So what I like doing is I like looking at the beginning of this move because we have a first uptrend breaking new high. And now this looks like we have another uptrend because the price is swinging up and down. It's just too structured. It's too symmetrical. And I can actually see that I have a decent trend line working here. One swing, second swing. So first two swings, third swing confirmation. So this fits actually pretty well. Let's see what's going to happen. And market keeps going higher. Now, we are right now in bullish uptrend. You can see how nicely it aligns with the EMA. EMA keeps serving as a support, but I also need to respect the short-term corrections. I cannot go long as the downtrend is in play. I would need to see close outside, attempt to test the new extreme. This is the attempt. Okay, we have a downtrend, one leg, break, and there is the attempt, the first entry short, to test the new low, but there's a high low because EMA is strong, there's a trend line, and the bullish bias is too strong. So this is the attempt. There has to be at least first entry short here, so you can consider buying. And downtrend played out. Downtrend, break, push to a new extreme. So this is a good sign. Downtrend played out. You can see market tends to move in pairs of twos. One leg down, break, second leg down. We have a second entry long. But once again, you have to use double bar entry. It's quite big because this is the initial bar. It's not a bad setup. It didn't even trigger. So as you can see, there is no entry. It didn't trigger. There was no break above the double bar entry bar. So there is no entry. I'm thinking about high low above EMA because the key entry point looks like it's holding well. There was no high low. We have new high now. We exceeded this. So we have actually, it's double top. Can reset. We have a high low here. Of course, I cannot go long above horrible doji, not at the EMA. And it's getting quite wedge. You can see the wedge formation. So at this point, I'm being more patient. I don't really want to take any setup here. There is nothing. I'm going to draw a small consolidation because I can see we have consistent pricing up and down. Flat EMA. Your goal as a trader is to look at these many patterns as you can because you can combine in some scenarios the uptrend with the fact that you can buy low at the support. So this is why it's helpful to also draw the small consolidation, not just the main trend, because this gives you additional potential key entry point. We have a new high, highest high, first entry long. There is no pullback. Here's the pullback. So this is a second entry long again, but you know, the signal bar is not the greatest. We closed quite down. It's right into these highs. It's tempting because you expect new high, but it's simply right into these highs. It's too sideways. I prefer to be patient. Now we have a break and a new extreme. Okay, so our trend played out. So now I'm gonna pause looking to go long. But market, instead of reversing into a brand new bearish trend and working lower, we're back above EMA. So market is telling me, okay, the bulls are still present in the market. I'm still not excited to go long. We just had a break in new high. Market keeps going higher again. And we're back above EMA again. So now I really have to question what's going on here. Is there some additional pattern? Is there some secondary channel? Because after breaking new high, you would expect at least correction, but we always break back above EMA. This is not the easiest structure to trade because main uptrend played out. You definitely cannot sell. You would need at minimum failed second entry long below EMA, preferably proven downtrend. But I don't think you can go long, and market just keeps going higher and keeps going higher. Okay, I have to right now adapt. Why prices keep going higher? Why the EMA is holding here? We have a first entry long, second entry long. We have a second entry long here, and it keeps working. It worked. So when I saw this and I saw structured price action working higher, I was looking for something that looks like this, some secondary channel. It's not the easiest uptrend to trust because it just looks so sloppy. It's barely working higher, but I cannot deny the fact that, you know, you keep making higher highs and higher lows. The market keeps going higher. Okay, now you can see, once again, no reversal attempt, because here you would expect some stronger bearish trend to begin. You're back above EMA. Also, I drew small trend range like this. So if I'm going to zoom back if you have to. It can give you an idea what the main bias is, and you definitely can see series of high highs and high lows. And this confirms our channel. One swing, second swing, third swing, fourth swing confirmation. You actually have high low here, but the signal bar is not the greatest. Now you have a second entry short, but I cannot go long here because it's too far from the EMA. The body, there's a gap between the body and the EMA. That's not what we want to see. Also, we have potential overshoot here. The hell was pretty tempting because it's also confirming the trend range, but let's see what's gonna happen. This is interesting. This was tempting. You have a new high, mini first entry long here, pull back because we broke below this bar, and you have second entry long here. The signal bar looks big, but it's not that big. It's only 3.5 points. Okay, it looks massive, but it's only 3.5 points. The ATR wasn't as big. This is tempting setup. I kind of like it. I didn't take it, but it was tempting to take it. Had it formed a little bit better, smaller, but this is not a bad setup. I will actually mark it green because when I was watching this live, it was a very tempting setup because we bounced off the range lows. At this point, it confirmed the uptrend. It's part of the visual failed second entry short because this one was so far from the EMA with the body. It needed to correct more to the EMA. So this is not a horrible setup, second entry long. And prices keep working higher. And what is important that this was a brand new significant push phase. A new high was created. So we have high lows and you have high highs. So as price action traders, we can arrive to a conclusion that there is bullish trend still present. Even though it is a secondary channel and it is not easy to trust it, we just keep working higher. So I have to roll with this. Of course, I cannot take first entry long. We have a downtrend working lower. Prices are pushing above EMA. We have a second entry long in the middle of nowhere. But if we're going to stay above EMA, I would consider high-low confirmation setup. And now we have high-low. Okay, high-low confirming the second entry long. It's back above EMA. I took this setup. I like it. One tick below, close back up because the trend line is confirmed. We keep going higher. And this is a decent setup. But I will admit, this trend is very, very sloppy. It's quite a unique trend because everything is just so sideways, but it just keeps working hard. If you didn't take it because it was a little bit too stacked, I cannot blame you. But we have so many high lows and high highs. I just have to follow the rules. It was a great setup. Market keeps going higher. Okay, we have a bunch of first entries only. We're breaking lower, so I'm definitely not interested in buying below EMA. Okay, we bounce off the trend line. So we can have some stronger correction. Okay, we can't even stay above EMA. So now we're breaking lower and prices are struggling to stay above EMA. You can see how consistent this correction is looking. So many lower highs, so many lower lows. So I cannot go long here. Number one is a horrible bar, but the downtrend is too consistent. This is not broad to like a pullback. You have two legs here, third leg, fourth leg, fifth leg. So I would need to see something above EMA, high or low, for me to consider buying, because I can draw now the downtrend in play and market reverse all the way down here. So now I'm really questioning, hold on, what's going on here? First, I'm going to draw my tight downtrend, something like this, and prices just keep going lower, and we keep going lower, and we keep going lower again. Okay, so now I'm going to zoom back. This retracement is simply too deep. It's too much of a downtrend. We retraced too much, and this was a secondary channel which may not get new high. Okay, it served its purpose. It allowed us to keep buying and trusting longs instead of getting trapped selling. But once I see such a clean retracement, you can see we can't even stay above EMA. This is a clean downtrend working lower. I'm forgetting about new high for this uptrend. We pushed so far down, and this is a brand new downtrend on its own. So what I have to do is I have to redraw now this one, because we're breaking new low, but we keep pushing lower. I can just extend this, but we have overshoot. Okay, we have overshoot, so we can have stronger correction, but the trend is down. Trend is down. What I like paying attention to is how nice it aligns with the EMA. That's always a good sign when you can see the trend line running congruently with the exponential moving average. You can see how structured the price action looks, and suddenly bottom drop, 90% degree spike down, exhaustion. That's a confirmation this is overshoot. Okay, big bar at the bottom of the move is exhaustion, confirming the overshoot. So there's going to be second entry short at the EMA after overshoot. We always have to skip. Okay, we can't take anything here. This was interesting setup. This is new low, first entry short, pull back, second entry short here. So here was the second entry short. It's quite hidden, but there is new low here, no break here. There's a little break here. We instantly push higher, so we got stopped. So there's the pullback, and now second entry short. So this is a lower high confirmation setup. You know, technically the lower high triggered below this inside bar right here, but for the sake of a discount, I'm gonna mark this as a lower high. It's big one, visual one, but this is an inside bar. I was on my break here, so I didn't take it, but had we take one tick higher and this was not an inside bar, I actually would have liked it, because lower high after second entry short, even after overshoot, can be considered, because that's the confirmation. It's a good thing that it was an inside bar, because it would have ended up stopping you out, as you can see. So if you have some slightly different bar, because tick charts can sometimes vary, that's okay. Depends on the broker, depends on how many days you loaded, depends on if you can reset the historical data. So if you had some better bar here with tick higher, I don't blame you for risking this, but because it's an inside bar and we skip inside bars, I'm not gonna mark it. But now uptrend has a break and push to new high. So uptrend played out, and this is broad price action. So this is confirming that the bullish reversal attempt is very weak. And once again, we like drawing these key levels because you can combine the push down with the key level. You know, we're above EMA, so I want to see a lower high below EMA. We have a lower high here, but it's just at the level of EMA. Okay, you can see it's sort of like a multiple test. Bounce here, bounce here, bounce here, bounce here. Very tempting setup. Very tempting, because according to price action rules, this downtrend needs to get new extreme. One leg up, break, second leg up. Market moves in pairs of twos. Overshoot generated a stronger correction. Correction depleted. Because it's not fully below EMA, a little bit more aggressive. Can I get a felt second entry long? You can see it still worked, because we keep our stop loss one tick above the signal bar. You survive by one tick. Here's the felt second entry long, but it's not below EMA and it closed bad, so we can't take it. Market is correcting, and now we have a lower high again. Okay, because this lower high is confirming the visual two-legged pullback, and it's confirming the triple test, the multiple test. Okay, because I'm going to use the highest high of the correction. I'm going to reset the count. So lower high is confirming the triple test here, and the visual two-legged pullback, and the fact that we need to get new extreme. This lower high is confirming the fact that we need to get new low, and it's confirming the previous felt second entry long. I actually like it because you need to get new low. Uptrend played out. This is a solid lower high. Solid lower high. Confirmation setup. Downtrend needs to get new extreme. And market continues to work lower. By the time I get a felt second entry long, it's simply too far down, so great lower high here. This one was also borderline, market in red. And this one was also decent. If you took this triple test, you know, I can't blame you at all. New low, first entry short, second entry short. You know, I'm gonna mark it. This is not a bad setup because you're buying at the top. There's some resistance. Decent set of setups. You have a break in new extreme, but market kept pushing lower. Now we have visual second entry short. Okay, clear price action moving in pairs of twos. But we just had a break in new low. We just had a break in new low. In a situation like this, I still need confirmation setup. Now, the broader these two legs are and the more separate they are from one another, the less likely there's going to be any broader channel. This is not natural. This is not how price action works. So every single time you're witnessing these two legs being broad, it helps you to negate any potential bullish reversal. But because we follow the rules, we just had a break in new extreme. I need lower high. Which lower high from here, lower high confirmation setup, you can see first entry or second entry short, punting higher. You definitely cannot go short below this horrible doji. You know, you can argue for using this bar, using these two bars as a form of a double bar entry. This is more nuanced way, more advanced way, because you like the context. Once again, you can argue for small resistance again. So you can see price action works the same way all over the place. It takes time, it takes experience to learn this, but it's really second nature once you learn it. There's really nothing that is complicated. You just identify the bias, draw key entry point, and you look for these two-legged pullbacks to the key entry point. And when there's a two-legged pullback, there's going to be a lower high, and there's going to be for second entry long. So it's the same price action every single time. I know it can be a little bit hard when you're starting out, but after you get some experience, it will become a second nature. You will count completely in your head, and you will not even have to zoom in closely. So you can consider double bar entry, but if I would be watching this live, I would actually probably skip, not enter this. And market keeps working lower again. Okay, so it's obvious that the downtrend is stronger because after breaking new low, two-legged pullback played out, and we keep going lower. So now I have to draw wide the channel, something like this. So this is how we know that we can draw wide the channel. Micro double bottom means we have to reset the count. Okay, you have micro double bottom because you have new low, first entry short, count reset. I have to reset the count, first entry short, another second entry short. A little bit of a doji bar. It's not a bad bar you can consider. Okay, you have also some small kilo here. It ended up working actually for like 14 ticks, 15 ticks. So it worked for a scalp. Second entry short at the key entry point. I would have shorted here if the signal bar is looking much better. I needed stronger close, but the signal bar has a bullish body, so I cannot short here. I gotta wait. And prices are going higher. They're going to our key entry point, perfect. And if the key entry point is gonna hold and we're gonna push below EMA, that is a good sign that the sellers are selling at the key entry point, and I want to see a lower high below EMA. Can you get it? No lower high here. Okay, triggered here, but of course I cannot take inside bar of this bar, above EMA, congestion. So I want to see for second entry long below EMA, nothing. You have a new high, first entry long, second entry long failure. You have felt second entry long here, but it's above EMA still and it's too congested. So once I see congestion, I'm going to draw something like this, but I still have an opportunity to enter, okay? Because the congestion can actually offer me potential lower high breakout pullback pattern. And why am I thinking about taking lower high breakout pullback pattern, confirming the first second entry long? It's simple. Key entry point held, and we need to get new extreme. I'm just following the trend, and now we have lower high. Tick higher, reversal down, great signal bar, breakout, pullback pattern, support acts as a resistance, and we have three key entry points. EMA, the small key level, and the main downtrend. The more key entry points you have, the better. It is with the direction of the main trend. I actually took this second trade for the day. This was a great lower high, great signal bar. You expect new low. You have to ride it a little bit, but eventually market keeps going lower. Perfect price action. Mini break in new extreme, but prices keep going lower. So now like doing, just widening it slightly because the break is so tiny. I'm going to make it just a little bit wider because the break here was very tiny. But now even this one has a break pushed to a new extreme, so I have to pause looking to go short. Okay, I don't think we can sell, we just have a break and push to a new low. You know, this is tempting. It worked for a scalp. You can see it worked for 13 ticks, but we just had a break a new low. It's quite sideways. You know, I gotta be patient here. It actually worked even for more. And now the market is about to close. So this is the overall structure for today. It's quite a long video today, I didn't realize it. But there were a few decent setups. Quite a good price action. Not that many confusing areas. This was a little bit sloppy uptrend, but it just keeps working hard. The downtrend working lower was fantastic. If you're even more aggressive, you can definitely argue for more setups. And now we have downtrend, break, push to new extreme, and market reverse. So I hope you had a good trading. I'm gonna wrap it up. I'm gonna talk to you next time. Good luck in your trading.